I think it's been a productive week. We've been a little bit more focused on some of these institutionally aligned events and conferences because we've got a lot of really interesting strategic partners that are coming, to market with us.
My name is Josh Gordon. I'm the managing director of Chintai. I'm also the co-founder of Honeybee and strategic advisor to Arch. My focus so far in the space has been really primarily strategically aligned with bringing institutional capital on-chain and bringing real yield on-chain.
Being able to align with institutions during this time where there's an unprecedented amount of excitement and institutional adoption, looking for not just assets that perform, but how to make those assets more productive. So we're educating and we're really working with a lot of these institutional asset issuers who are looking for more utility through blockchain.
The first use case that we saw be successful when it came to RWA and tokenization really was focused primarily around treasuries and money market funds. Those were the easiest and most liquid things that we could bring on-chain to be able to strategically allow people to get access to those, earn some yield on their stables. The next innovation that I think is going to be really front and center, we're already seeing it happen with both Apollo's a cred fund and multiple other private credit funds coming on-chain right now. This is going to be really the future where we see people getting access to these type of yields. What it takes right now to get access to a private credit fund is you have to go to a registered investment advisor, you have to go work directly with a broker, you have to have an intermediary to go work with them, they take a cut of your investment, where instead what we want to allow people to do is take your staples that you have, directly allow you to make that investment into our platform. We also want to do something that I think that's really innovative, something that hasn't been done at all yet, is we want to be able to bring this institutional yield to Bitcoin. And then we want to have Bitcoin-denominated yield paid back to you for being able to provide that liquidity directly to these opportunities. This is something that's going to be completely new and really going to be great for the space.
Right? They have all these different real world assets, whether it's private credit funds, reinsurance funds, real estate, golds, etc. And all these assets are, for the most part, illiquid, right? They exist in the traditional markets to some degree if it's a very liquid commodity or something like that. But up until recently, this private credit world is very gated, it's very black box, and there's a lot of inefficiencies both on the legal side, compliance, escrow, and ultimately making them more liquid so that they can trade. Yeah, no, we've signed a few LOIs that are going to really bootstrap the liquidity that's in the Arch ecosystem. As far as RWA is concerned, we've got about 600 million worth of tokenized golds that will be coming on chain and be borrowing against that gold to then go use the stable coins for yields. It's a phenomenal use case of being able to leverage a stable RWA asset and make it more productive.
We want to create an entire ecosystem for your traditional financial structure that you need, from perp dexes to lending to borrowing to everything, in one place where you can come on and get it in a comfortable place. It's not about just borrowing stables. It's about taking your Bitcoin and putting it to work.
We have a lot of other private credit and corporate bond products that will earn yields, outsized yields compared to the lending markets on, Aave and Morpho. So that ultimately you can get access to some of these more institutional yield products that aren't available to everybody. So stuff like that, I'm really excited about. And we've started to finalize some of these partnerships with asset issuers. And right now we have about 2 billion worth of tokenized RWA that's going to be coming on chain. So really interesting and exciting times. I can't speak too much about some of the structured products that we're starting to layer into some new derivative assets. But I think from a generalities perspective, you're going to have probably the most competitive, structured yield and RWA products in all of crypto. But then taking it a step further and doing it on Bitcoin, I think is going to be something that is very exciting. If we look at, broader DeFi on applications like Pendle, Morpho, et cetera, you see a lot of efficiency for these tokenized assets and being able to borrow against yield generating assets. But historically speaking, we're talking about crypto native assets, whether that's some type of algorithmic yield protocol or something of that nature where they get some form of yield through the crypto sphere.
It's not real yield. It's yield that's abstracted out of token airdrops, it's juiced, and it's things that you really can't rely on. What I think is important with the bridge between bringing institutional capital on-chain and allowing retail people access to those institutional opportunities that typically are gate kept from them. These are things that really, I think blockchain has the advantage with being able to merge the two together. And this is what we're building currently at Arch with Honeybee and with Chintai right now.
But as we know, there are a whole plethora of assets out there that generate yield, whether it's private credit, government and corporate bonds, and other types of yield generating investment that can now come on chain. And they can not only get the amount of liquidity on a global basis, but they can use those assets for leverage and for trade as well. What I do think is been refreshing and exciting for us internally is the response that we've been getting from key players in the crypto ecosystem. Centralized exchanges, custodians, MPC wallets for institutions. All of them know what their customers want, and historically speaking, we've been this general purpose Bitcoin L2 chain, and there's a lot of competition and noise in that world. But when you start to talk to them about some of these private credit vehicles and tokenized RWA that settle to Bitcoin, the attitude changes. There's some excitement and anticipation that comes with it, which I think has been really refreshing to see in the last few months as we've started to onboard some of these asset issuers and get prepared for what's to come. A lot of these crypto natives and centralized exchanges are quite enamored by the value prop and the unique selling prop that Arch brings, especially when you combine it with this RWA narrative.